Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about what sort of housing data to look at between now and the end of the year, including purchase apps and the other really important data points. First, I want to say thank you to our sponsor, Optimal Blue, for making this episode possible. Logan, welcome back.
What a weekend, what a Friday that was. And by the time this podcast comes out, the tracker data is out. And of course, what I've always tried to emphasize, supply and demand equilibrium economics should only really be traced by live, fresh weekly data that is typically current or ahead. You don't want to wait months before you get to see data. This is the beauty, and if you're a data nerd person, you're living in a lovely time. But over the last few years, we've always said the housing data typically acts better only when rates get before 6.64 down to 6%. If you take the non-seasonal factors out of the equation, even though existing home sales beat estimates, our weekly tracker was highlighting, okay, we could get a little bit of growth. The bar is very low, not much. But if you're talking about consistent growth, you need long duration of forward-looking data getting better. And what do you mean by forward-looking data get is purchase application data was 28 weeks now of positive year-over-year growth, like 15 weeks of positive year-over-year growth. But the weekly data hasn't been as strong as it has been before. So now I think hypothetically, if, and this is still big if mortgage rates do go down to 6%, we want to see how this reacts because, so far the August inventory data has been negative. We'll get that data reported up again for Monday or over the weekend. And also, the new listings data is also slowing down. So new listings is important because 70 to 80% of home sellers are buyers, but you can get growth in home sales with new listings data still bearing very low. And we have this because in 2022, when new listings data was fading, mortgage rates went down to 6%. Purchase application data had 12 weeks of positive weekly data, and it gave us one of the biggest home sales prints ever recorded in history, near 500,000 for just 1 month. So I think going out is we want to see, has inventory really peaked in August? For our data line, it's a little bit different than the NARs. Usually October and October and November have been the peaks recently. But if rates go lower now with inventory all falling, how does that work out? And I think that's where the tracker becomes a little bit more sophisticated, a little bit more fresh, because what we're seeing right now are going to happen in the sales data 30 to 60 days out. And you're talking about 3-4 months out in the existing home sales report. So that'll be the fascinating thing going out in the future. If mortgage rates were at 6% and are staying there, that's a whole different question, but we're not quite there yet. But the last 3 weeks since mortgage rates have gone below 6.64, all 3 weeks, at least for purchase apps on the weekly data, have been positive. The year-over-year data has been positive. So we'll keep an eye on to see if that continues, because if you could get 12 to 14 weeks of that, that would be a material change. You will see that eventually in the existing home sales data, like we've seen, in that one big print early 2023. And, we had a couple 100,000 more home sales in 2024. Early 2025, we had one from the lows of last year.
Let's talk about inventory for a minute, because I think that when you and I have talked about this, when I've edited your articles, the tracker about this, I'm often surprised at where the seasonality cuts off for inventory. Like I would think isn't it the beginning of August because people are headed back to school soon? So talk about where we are with inventory and why you think that's either we can put that down to seasonal or if it's something else.
So if you look at the NAR's inventory data, they typically peak June, July, August. If you look at our data is fresh, live homes that do not have a contract. So people can keep their homes up there for longer and longer, and inventory can stay elevated like it has the last few years. But normally with our data line as well, July, August, inventory is starting to fall. That was pre-COVID. So we haven't had that happen up until recently. And we kind of picked up on this mid-June. Like it was mid-June when we did that podcast and we wrote that article. The housing data is starting to stabilize. Now, partly of that is inventory growth was very good. I was all happy. Big smiles here. Um, but with our data line to keep that inventory growth above 33%, you really need data to stay weak. So when rates started to creep down a little bit, it was stabilizing in mid-June, and then July the 4th came, and now they were mid-August, almost to September. Inventory falling cumulatively is different. So we're not back to normal, but we're good enough to have a sane housing market. This isn't the seller housing market where prices can keep elevating at an accelerated. There's enough supply there, and that has always been my thing since mid 2020, where people were talking about big, major deflationary crashes in home prices on a nominal basis, things we haven't seen since the Peloponnesian War, even worse than 2008. That wasn't really going to be the case with inventory, but the problem was that when you have shortages, and I'm an active inventory guy, as long as I have active inventory above 1.52 million, I'm not a low inventory person, but this was different. So the fact that higher rates did their thing and created more inventory, there's more supply, this is a more buyer's market than we've had in the previous years. And I see that as nothing but a positive. But we're not quite back to normal. So it is going to be interesting for me to see what happens with our inventory data and what happens with the NAR inventory data, especially if rates fall. Because when rates fall, same model as always, 70 to 80% of home sellers are buyers. And then the first time home buyer comes in or other buyers come in that don't provide your house, the inventory has a hard time growing in that environment after a qualified mortgage. So the inventory story becomes a little bit more fascinating to me because we haven't had this happen in recent years where active inventory starts to fall in August. The price cut percentage is stabilizing out, but we have much more inventory now than the last few years, and the product out there is more expensive than historically. So there's a lot of variables working here.
Okay, let's talk about that home price variable. So Mike Simonson just this week wrote an article for HousingWire where he talked about home prices are about to go negative, and let's qualify that. It's not like he sees some crash or anything, and going negative just means like nationwide they're not actually growing. So tell me what you think about that, and tell me how that fits into your forecast.
So I'm still low for 2025 because I anticipated a lower price growth year. Majority of the year, and I base off mine's Case-Shiller index. Mike Simonson was using the price per square foot. Our own median sales price data should be negative September and October because last year I lost my forecast because pricing was stronger there. I need more weakness to stick for my price forecast to work because majority of the year has been higher than my forecast. And this goes back to 2022. A lot of people thought 2022 home prices were down like 6% for the year, but home prices started at 18% growth and they came kind of down to 6%. So on that yearly, God, 2022 was crazy. That rarely happens. But because home prices started off so hot, 2022 price forecast, oddly enough, hit the nail, and for the wrong reasons. I had like 6% price growth because I thought rates are going to go up and cool down prices, but prices were so strong that mortgage rates getting to 7% got my price target right, and that's just because the whole thing was crazy that year. Here, I need more price weakness to get to my 1.77%, and I base it off Case-Shiller. I am not using what Mike uses, the price per square foot, and not even talking about our own median sales price data, which should be negative. For my price forecast to work, I need our data to be negative in September and October. But you can see the slowdown in prices, very slow, sticky. That's how nominal home prices have worked since 1942, unless you have distressed sales. But my concern for my forecast is if rates go lower and we're already seeing inventory fall, what does that do? Because I lost my forecast last year because of this. And this year I'm keeping an eye on it. And again, what we see is going to be coming out a little bit later on the Case-Shiller and the existing home sales report. So I'm a little bit more mindful of the supply and demand equilibrium, because if I'm going to lose my forecast again being too low, then I need to figure out when did that happen. Last year it was really easy for me. September and October, I was like, ugh, I'm toast. We ended up being up 4% last year, and the forecast was for 2.33%.
Okay, so I know that the existing home sales market is so much bigger than the new home sales market. From your perspective, does what's happening in the new home sales market have any impact on prices in the existing home sales market?
What are Fight Club rules, Sarah Wheeler?
We never get those two mixed up.
We do not, under no circumstances, ever mix the new home sales market versus
I
the
know, but there have to be
no,
some
there isn't.
impacts.
No, there. I am telling you, what we have human beings, adult men, who supposedly graduate kindergarten, telling people that existing home prices are down 23% because they see the new home sales, and they even chop off the data lines. Sarah, I understand why the Russians hate us. I understand why the Iranians and the Chinese hate us. I don't understand why the anti-central bank people live in America if all they're going to do is cry and hide behind goofy ass names all the time. I don't get it. Why do you think I want these people on live baits? Because they constantly tell people existing home prices are crashing for years. It's only one clan, only one clan. And this is why we try to teach people what happens in the resale market is different, because you could have times where the median sales price for new homes really takes off because of the makeshift of sale prices. And that has nothing to do with the existing home sales market. So two different things, because what's happening in the new home sales market is actually very, very healthy. I'm what was the whole thing in 2022? We need rates to go up higher to put home builders on their, and that's what happened. They're making deals. They are efficient sellers because they sell homes as a commodity.
Right.
So that really doesn't apply too much with the existing home sales market, because there's a divergence in the pricing. And I've seen that mix up so much that I created those Fight Club rules, because if you did, then you would be wrong for 3 years. You would show the census data like some of these clowns do, and actually go, oh my God, home prices are down 23%. I get this from the government. Grown ass men, old, and just like they can't leave this planet fast enough. They were just, oh, that's not how it works. So the supply and demand equilibrium for the existing home sales market is different. And I think the greatest factor that we've ever seen in our history is that the monthly supply for new homes was like 8 to 10 months, when the monthly supply for existing homes were still sub 500, sub 4.5. Even now, there's a very, very huge historical gap between the monthly supply of existing homes and new homes. And new homes, again, it's categorized to completed sales, in construction, hasn't started yet. This is why we don't mix the two. This is why we never mix the two, because right now the builder stocks are ripping higher, and people are like, how do I explain this? I can't do my doom porn newsletter if I told people builder stocks will be down 40%. Different marketplace, keep them separate. That's why we have the Fight Club rules. We never talk about the new home sales. The fact that you brought this up, Sarah Wheeler, get a ruler. Shame.
Listen, sometimes I just want to trigger you. It's just fun to watch. And, people might be new. They may not know those rules. So we know, what is it like Ghostbusters? Don't cross the streams. A
Don't
similar
cross the
thing.
streams. You know better. But again, different marketplace. And I'm very simple. Go type in new home sales monthly supply, and then look at the last few years. Go type in new homes or existing home sales monthly supply. So different years. They can mirror each other to a degree, but this was a very unique cycle in so many ways. And it's like one of these things. Everyone say, why are the builder stocks just ripping and killing it? And oh my God. And you have all these people like new, and 10-year yield goes lower. The builders could sell homes. They sell homes efficiently. Why? They don't have anyone living there. They just make it, build it, sell it next, right? Home sellers and buyers, they got to sell, they got to move, they got to go all these things. They got to deal with agents, and sellers have real high expectations for their home. There's all these things. Builders don't care. Why, Sarah?
Because they're not the March of
They are
Dimes.
not the March of Dimes. And human beings are human beings always. And human beings will try to make the most money as possible and try to get a deal. But the builders are like, I got to move product, man. Okay. I don't want supply building up, because then everybody's going to ask for price cut, my margins go down. They are what I call efficient sellers, where the existing home sales market has still a human element into it. And they can take a very long time, where the builders can't necessarily say, oh my God, I got 8 homes here. Let me delist them. Oh, I can't do it. I can't delist these homes. Right. So it's a whole different world. Right. That's why I say just don't mix these two.
Okay, so everything that we've talked about so far is the data that you cover in the tracker every week. You get the data on Friday night. You spend your Friday nights looking at that data, doing the tracker. And I will say to our audience, we've made it much easier to find. So it's housingwire.com/housing market tracker. There's a whole page. You can look at the all of the charts that Logan has done for all of, I think it's like 8 different things, 9 different things just on that page, plus all of the most recent housing market tracker. So it's everything you've talked about, but it's also mortgage spreads, it's price reductions, it's what to expect next.
I care more about the economics of housing, all the variables that go into it. So we have a whole section of mortgage rates, 10-year yields, spreads, what happened, what's next. And then there's the inventory data, where is it going, price cut percentages. And then we have the demand data where we look at the purchase application data, but then we look at our weekly pending contracts. And then we look at our total pending sales contract. We put them all together. And this way, it's a fresh live view in the weekend. So you don't have to wait 2-3 months to get it on the existing home sales report, right? And this keeps everybody in. I think this last week was a really good example. The gentleman that I debated on Twitter a few months ago who thought home sales were crashing, going to get to 3 million, then eventually down to 2.3 million. I go, homie, if that was the case, we purchase apps would be collapsing. Our pending contracts data would be collapsing. That would be the second biggest home price or home sales crash in history. None of it's there in the data. So the fact that we were up slightly, what have we talked about here for months? Listen, it's a very, very low bar in home sales. So if you get year-over-year growth, take it with a grain of salt. It's just an extremely low bar, move higher. But the tracker also confirmed that. So we'll let everyone know. And it's kind of like the new listings data. If there's stress in the housing market, new listings will go vertical. If you want to listen to people that talked about this, rushing to sell their house and all that stuff, but had no data to verify it, okay, that's fine. It's a free world. You can do what you want. But if you're serious, if you really care about this stuff, Chart Daddy's here 24/7, never sleeps, all day, all night.
Confirm. You are putting things out all the time. I would also let our audience know Logan, you are our featured speaker at the Mortgage Bankers Summit that we are having in October. Everyone should come. It's a one-day summit here in Dallas. Going to be amazing. So people look for that and also check out the tracker. And Logan, thank you so much for being on.
Pleasure, Sarah Wheeler.